Olá! Hoje iremos abordar um conteúdo muito importante para quem realmente busca se tornar um especulador profissional de sucesso. Sabemos que muitos ficam fascinados com as oportunidades que o mercado financeiro oferece, especialmente mercado de trade. Porém, muitos acabam perdendo dinheiro por não terem o conhecimento necessário. Hoje trarei informações que vão mudar sua visão sobre o mercado de trade. Está pronto? Sabemos que candlestick desde sua criação já se passaram mais de 300 anos e não vemos que ocorreram mudanças no mesmo gráfico utilizados há séculos. Portanto, o mercado desde décadas atrás já não é mais o mesmo. Há praticamente algumas décadas atrás seria impossível utilizar computadores e tecnologias a fim de atuarem no mercado financeiro, pois alguns computadores equivaliam a alguns metros em tamanho e poucos avançados. Mas hoje, com avanço tecnológico e ferramentas avançadas, muitos participantes do mercado especulativo utilizam esse tipo de ferramenta. Estima-se que 70% do mercado americano é formado por robôs HFT, e mercado brasileiro 20%. Os robôs High Frequency Trading HFT são programas de computador que realizam operações de compra e venda de ativos financeiros em alta velocidade, com o objetivo de lucrar com pequenas flutuações de preços. O mercado é composto por players diferentes, estilos e execuções diferentes. HFT é participante de mercado, são empresas especializadas com alto nível de conexão com bolsas mundiais e alto nível de tecnologia em logística. HFTs são importantes pois geram liquidez no mercado. Esses caras formam preço, eles estão em todo nível de preço, eles não possuem lado, executam operações na velocidade de um piscar de olhos. Não são como o robozinho executor que vemos por aí. Logo sabemos que o mercado é formado por grandes participantes, o volume financeiro que é injetado pelos formadores de mercado, de acordo com interesse e poder aquisitivo, permitem que essa liquidez seja gerada como combustível, sendo injetado no motor, mercado fazendo que ele se movimente. Portanto, o que temos que ter em mente é como ter sucesso em um mercado onde 70% é formado por robôs que utilizam algoritmos avançados que estão em todo nível de preço e a outra parte por grandes instituições com estratégias avançadas. É possível identificar determinadas ações desses grandes participantes? Aqui no gráfico vemos muitas informações relevantes, mas a informação mais relevante para que podemos perceber determinados movimentos dos HFT é a liquidez. Com ela identificamos como esses robôs manipulam a liquidez para manipular o preço a seu favor. Monitoramento de volume. Os robôs HFT podem gerar um grande volume de negociações em um curto período de tempo. Portanto, o monitoramento do volume de negociações em um determinado ativo pode ajudar a identificar a atividade dos HFT. Ordens spoofs é nome dado pelos traders americanos quando identificam manipulação varrendo a liquidez em mais de 2 ou 3 níveis de preço consecutivos. Espero ter ajudado a abrir a mente de vocês em relação ao mercado de trade. Bons estudos e sucesso! E caso queiram adquirir nossas ferramentas, não deixem de acessar link na bio. Irei deixar partes do vídeo de uma entrevista com fundo de investimento que utiliza robôs HFT.
Hi guys, today I'm here with Pat and Eric. They run an investment fund called Quanti Brazil, and I'm so proud to be here. I'm so glad to you guys and Rafael that in fact introduced us. So hi guys, how are you?
Great.
Thanks a lot for allowing me to be here. I'm so glad about that.
Great. Yeah, we look forward to kind of speaking about what we do. We're very enthusiastic about it.
Okay, thank you so much. HFT company.
Sure. Well, high frequency trading, the way I look at it is it's a subset. People kind of lump it in as just this one thing. I view it as a subset of quantitative trading, which is basically anything that uses a mathematical model where you're not saying, oh, I think oil is going to go up, that's why Petrobras or iron ore is going to go up, I think Vale is going to go up because of that. Where you separate out the driving forces of what you're buying or selling based off of not fundamental data, which is qualitative, versus quantitative data, where it uses math to make the investment decisions. Now, this is a very big difference with how the traditionally for years and years is because computing power wasn't there. It wasn't available to on a big scale basis to go and be able to analyze and on a very usable basis. Before, even 10 years ago, to get the same processing power, you needed a building full of computers, and that was just not possible. But now, with something the size of a laptop, you can do a lot of work. But coming back to your original question about what defines HFT, in my mind, it varies from person to person. It's just the length, the time horizon that you hold an investment. Okay. So like Quant Brazil we consider ourselves mid-frequencies because it's longer than a day, but not these long-term investments like Warren Buffett where they buy and they hold. Like high frequency I define as less than a day. It could be less than a second as we showed you earlier. Yeah. Some of the trades on a high frequency basis, the time it takes to blink your eye, you'll be, someone will buy and sell the same thing.
Yeah, and you said me something. You told me something really interesting concerning. It's more regarding the compiling data rather than just trading. So this is if someone look at the data in a high frequency basis, yeah. Even though they don't send orders in a high frequency sure. basis, they are still considered high frequency.
Right. And that's why I made that point, is because there's a lot of confusion. What does high frequency mean? Most people assume it means that you're just in and out, trade. There are algorithms and strategies where you're analyzing on a high frequency basis, but maybe you'll make one trade a month, one trade every week, one trade every 2 months, but that trade is going to be a highly profitable trade, and the scenarios and the variables that go into that trade don't happen very often. So that's from high frequency analysis, not necessarily trading.
Okay, this is a good approach. I had no idea about.
Yeah, and there's so many different types of trading, both on a high frequency basis, but it all falls in under this category of kind of big data and quantitative analysis, like whether it's high frequency or mid frequency or even long term frequency.
Okay, and the other question I think everybody wants to know is what do high frequency do?
Sure.
In terms of, I'm not talking about the strategy, but the main concept behind each strategy. I mean, art, news, news play, or things like that.
Yeah. So there's a lot of ways to kind of skin a cat, as the American expression goes. So there's arbitrage, where you're playing the markets against each other. There's momentum. There's mean reversion. There's the news strategies. There's a lot of different ways, and that's the thing that people kind of lump in high frequency or quantitative trading. There could be one algorithm that says to buy this at this price, and another one saying that a quantitative saying to sell it. So it's always subject to interpretation. And one of the things that robots only, and the computers and the servers and the robots, as we always say, they only can do what they're told. But the beauty of it is they never call in sick. They don't ask for raises.
They are not afraid.
Yeah, they do what they're told, and that's kind of the beauty of it. But also, it doesn't mean that there's some magic formula that all of a sudden you just enter in and you can make millions of reais.
Yeah, or dollars.
Yes.
Or dollars. But I mean, the large volume. Here in Brazil, that 70% of total volume in the United States is HFT volume, and in Brazil we have 20%. I don't know. It's hard to figure out, but I mean, how much of that total percent?
I would run away from them and don't believe it, because it comes in at very, very different ways. Like an ARB, how do you define ARB, and also how do you define high frequency trading? Is it, some people, Warren Buffett would consider a high frequency trade anything less than a month, or some people say if it's not less than a minute, that's not a high frequency trade. So there's so much definition, and then you get into the political realm of the different exchanges labeling it this, that. So it's a very difficult thing to measure. But I will say that it is a driving force in the market, is because just as much as everybody uses Google now, computers are here, and this method, and this, whether it comes in a high frequency, mid frequency, long term frequency, it's part of the market structure.
Okay.
And it's going to be here for forever.
Okay.
There's no going back.
So this volume
Yeah, in the U.S. it's 70%. It's only going to grow because there's a lot of different ways. Do you define like a high frequency? Is what if it's a strategy that popped up a stock and then you manually put the order in? Is that considered a quantitative approach, or is it has to be fully automated? There's a very loose.
It's misunderstood or not misunderstood, but it's hard
very
to
broad. It's a very broad and I don't think there's really an advantage to necessarily just labeling it that. I think what I would really emphasize of how you're deriving your investment decisions. Before, it was purely because I think I like this shirt. So I think the company that makes this shirt is going to do very well. I'm going to buy this company. But now with quantitative, high frequency, everything, it's based off of mathematical statistics. Now you could speak English, Portuguese, Russian, Chinese. Math is still the same across all those languages. That's why these models, and mathematically speaking, work
places.
As we discussed, the cycle of fear and greed is the same whether you're in Brazil or in New York.
United States.
Yes.
Even considering different liquidities.
Yes.
Considering.
And there's obviously the microstructure is different, and there is some arbitrage within every market, but that's
the main idea.
That's the main idea.
And I think the other question I'd like to ask you is how HFT became the market different. I mean, what are the main differences you can see after these 5 or 6, 7 years HFTs started, becoming influential in the market?
Sure. I think that you'll get, if you ask 10 different people, you'll get 10 different answers for that. Yeah. So I want to start by saying that, obviously I'm in the industry, so there is, some bias to my answer. But I would say that it does exaggerate moves sometimes, but the counter to that, it also does add liquidity to it. So there's never an excuse or a reason for a bad algorithm to make money. So it all kind of comes back. It kind of comes back to that. Now you just have it all comes back again to how computers are so part of everyday life now. So all algorithms are taking the same human thoughts of how did you look at the stock? Why did you want to buy this? Buy low, sell high. What were the factors? What did you see? And all you're doing is putting it into a methodical, programmable way. So the way to look at it is not what necessarily changed. It's how did you interface with your investment decision? Now the only difference is you can do it faster and on a bigger scale.
Okay, but if you are looking at a graph, you probably won't notice that market changing. But if you look at if you look into raw data, you can easily realize that it's completely different. So
sure.
I think the first answer you gave about sometimes the exaggerated moving, I realized that, and I realized also that sometimes market is trading more in a range than it used to be. In terms of people are taking or machines are hitting or both sides simultaneously. Yeah, I don't know if it makes part of the strategy because this changed a lot.
Yeah, it's
sorry about the YouTube, but the order flow, are not so clean anymore. I mean, there's no more momentum in terms of upticks and downticks in a row.
Yes,
I think this is what I know. What do you know? It's in Brazil.
Yeah, I would agree with that, but also that's I think a function of markets changing because of the computer age, just as much as the traditional 9-to-5 job doesn't exist anymore. Now it's the whether it's the Uber economy and you have to start and work for yourself, like the traditional 9-to-5, you work in a factory, then you go home and it just doesn't exist, and it's almost a reflection of that in the market. So it's difficult because if you look at some of the volatility measures over this past decade or so, you can say that the actually opposite, that its HFTs reduce volatility with these ranges because the volatility indexes, but then there's also extraneous variables such as the quantitative easing. Like how much is that sitting like a bid by the government? Whenever a government gets involved into a market, everything becomes distorted. And I was saying, HFT and quantitative trading kind of acts as the whipping boy, and like everything that goes wrong, that's HFT's fault.
Yeah.
It's nothing else. But as everybody knows who's ever traded a stock, there are so many things like that are unexplainable, but that's what
people
the essence.
Complain
it's the essence of the
about,
market.
Before I came over, I was talking to Rafael, and we were trying to script this interview, and the last question was, what can we expect from HFTs? And we were just talking before, and it was the same thing in terms of HFTs they changed the game. But there is a major change behind that is after 2008, the prop desks, I'm talking about banks, institutional, they have their limit cut. So we call in Portuguese available money.
Yeah.
So it's hard to who we are going to take the money from.
Yes.
So I think this is probably we were talking before, he agreed.
Yeah.
I think this is the major change. And these guys are changing the way they trade. So institutional, we were just talking, they used to put a large order, and nowadays they are splitting these orders just to
hide their
flow.
Exactly.
But what can you, in your opinion, what can we expect from this recent or these actual changes in the market?
I think that's a great question. The first thing is that pattern and this way is here. Whether someone likes it or doesn't like it, it's here and here for good. One of the things that I would really emphasize is try to slightly expand your time horizons, just because, like I explained to you, the human eye blinks in 300 milliseconds, and there are algorithms that will buy and sell within the time it takes a human to blink their eye.
You show it, I almost didn't believe when you show it.
And it's because the human mind, and this all comes back to the core of technology and Moore's law with processing power, and the computers are so powerful now that we're not even really we're not understanding how much data and crunching that data is. But again, that's the opportunity also. It's because we're very, very early. The people who, just like life is always changing, is the people that can adapt to this market fastest are the ones that are going to win.
Okay, so this is a good advice for me and for you guys. So Patrick, thank you so much.
Thank you.
Eric, pleasure. Thank you. It's a pleasure to be here. And I hope to see you guys in Brazil.
Great.
And we are going to talk. Keep in touch.
Great. Thank you very much.
Thank you.